Welcome to my YouTube channel. Today we're going to be talking about a couple different topics. First, we're going to be talking about what is Bitcoin. There's been a lot of hype around Bitcoin. There's been a lot of hype around cryptocurrency in general, and it can be really confusing to people just starting out. So I would like to clearly break down cryptocurrency and more specifically Bitcoin. I'm also going to be talking about the risk of Bitcoin and cryptocurrency, the potential upside, because there's a huge potential upside. There are millions and millions of dollars to be made in this industry. I'm also going to be talking about what lies ahead of us for us cryptocurrency investors, because full disclosure, I am an investor in cryptocurrency, not so much Bitcoin, and I will touch on that later in this video. So the first question I'm going to be answering is, what is Bitcoin? Essentially, Bitcoin is a digital asset, right? Think of it as digital gold. That is the most common comparison. And how it works is there are individual computers. These individual computers are called nodes in the cryptocurrency world. These nodes make up the Bitcoin network. And when I send a transaction or anyone sends a transaction, that transaction is broadcasted to the network. And these nodes, they want to group these transactions together in the blockchain. So let's talk about the blockchain. The blockchain is how the network determines when the transactions were made, as all transactions in the same block are considered to have happened at the same time. Each new block inside this blockchain references the previous block's hash. Simply put, a hash is a combination of symbols and letters that is unique to each block. Like I said earlier, each block references the previous block's hash. This creates the blockchain, with every block referencing the block before its hash. Now, how does this whole process happen? The answer is Bitcoin miners. Bitcoin miners really carry the entire system. The role of Bitcoin miners is to secure the network and to process every Bitcoin transaction. Miners have achieved this by solving a computational problem which allows them to chain together blocks of transactions. The entire process is what makes Bitcoin a decentralized currency, which essentially means there is not one entity or group that controls it, as the Bitcoin network is made up of individual computers that we call nodes. This has to be one of the most appealing aspects of Bitcoin because it gives the individual more power, unlike having your money in USD, which is subject to high amounts of inflation that is completely out of your currency. Because, like I said earlier, there will only be 21 million Bitcoin ever mined. So when that happens by the year 2140, Bitcoin will become a deflationary currency, which means the value will steadily increase. So another reason I really like Bitcoin is because it takes power away from the government. The government cannot influence the supply of Bitcoin like it does for the dollar. There will only be 21 million Bitcoin ever mined, and that's set to happen by the year 2140. This is opposite of the dollar, where the government has complete control over the dollar. And right now, inflation is going crazy. 30% of all currency currently circulating has been printed within a year. Think about that. 30% within a year. That's absurd. And Joe Biden's planning on printing $2 trillion more. What do you think that's going to happen if you have your money in USD? It's going down. The purchasing power you're going to have with that currency is going down because there's going to be more in circulation, less of a demand. So the value of your currency will decrease. This can't happen with Bitcoin. No one can change the supply in Bitcoin. There will only be 21 million Bitcoin ever mined. Now let's talk about the potential risk of Bitcoin, because Bitcoin is not without risk, all right? Don't be fooled by all these cryptocurrency gurus that it's a completely safe investment, because it's not. Bitcoin is highly volatile. It's constantly fluctuating thousands of dollars every single day. But that will change as the market cap becomes larger. So the larger the market cap is, the less volatile Bitcoin will be. Now, some risks that I want to address first are regulations, right? Everyone fears regulations. If I'm ever talking to a bearish person regarding Bitcoin, the first thing they bring up is regulation. And I don't think regulation is a huge problem for Bitcoin. More regulation will lead to wider adoption of Bitcoin because more people will trust it. So now let's talk about probably the most critiqued aspect of Bitcoin. And this has to do with the true value of Bitcoin, which you can never really tell, right? It's not backed by anything. The US dollar is backed by the US government. So if the US dollar were to fall, the US government would have to fall. This is an example of a fiat currency. A fiat currency is a currency backed by a government. Bitcoin doesn't have that. So the value is only as high as we perceive the value to be. And this is a problem because if we suddenly perceive the value to be much lower than it is, we will get a dramatic drop in the price. Now, I don't think this is happening, or will happen for that matter, because of the simple concept of supply and demand. There will always be more demand for Bitcoin than there is supply of, which causes the price to go up. And this is because there will only be 21 million Bitcoin ever mined. Well, that about wraps up this YouTube video. Thank you guys for watching until the end. And I want to be clear, this is not a Bitcoin YouTube channel. This is a finance YouTube channel. I'll be talking about many different stocks. Later this week, I should have a video up about Tesla, the fair value of Tesla. Is Tesla still a good investment? It's not. So stay tuned for that. And thank you guys for watching.